I am a proud contributor here at MarketStream.live. Welcoming you to Strategy Now, looking at the noontime action, what's happened this morning, and what we can anticipate going into this afternoon. It's been a grindy day. Basically, the broad market is split coming into the midday, and this is the kind of action that we've seen for the second straight day. As a matter of fact, you see the NASDAQ composite basically down a little bit, around 52.41, right around about 1.17%. The Dow Jones Industrial, it's been waffling back and forth. It is positive right now, up about 26 points. And the S&P has been waffling between down one and up one. Well off its worst levels, but well off its best levels today. And then the Russell 2000 is actually the biggest laggard, down about 10 right now. And that's the real story and something that I want to hit on as far as strategy. Now, the Russell 2000 is made up of the small cap stocks that are basically domestically centric here in the U.S. In other words, domestic stocks here in the United States. The action that I've been seeing in the small caps today specifically has put me on a little bit of an alert. And the reason why I say that, and I have mentioned this over the last couple of days with the Russell, I kind of treat it as either the canary in the coal mine. In other words, it's telling me that there's some sort of cyclical change that's in the making. Or what I'm seeing is that basically there's some, we'll call it, I'll make up a word, de-risking going on within that sector. Let me explain. As far as the de-risking component, really the catalyst behind potentially pulling out of small caps, these higher beta, domestically centric stocks, is because we have the election coming up. We have a couple weeks to get prepared for that, even less than that. The battleground states are now being discussed. Hillary Clinton seems to still have a lead, but there's still a lot of vacillation between that. So you could be seeing that there are strategists that are weighted in the small cap saying, you know what, I'm going to remove some risk here potentially going into this binary event elections, because these higher beta stocks are also lower capitalized in as far as market cap. So in other words, the liquidity might come in an issue if in fact we have some volatility in this market, which we've seen. So it means it's harder to get out of these small caps. So there could be some managers and some traders and some investors that are scaling back. And that's going to be a theme that I want to touch on in just a moment. Or there could be some cyclical change. You could see some sector rotations that are happening within the small cap space, where based on where these managers are seeing who's going to get into office and who's not only in the presidential elections, but starting to weigh in on the congressional and senatorial elections that are going to be occurring. These could be moves that strategists are getting in position for, so that they don't, A, get caught in a liquidity pocket. So if volatility does resurrect, they're going to get out right now at better prices than they would if, in fact, liquidity becomes into question because of volatility, uncertainty, or they're positioning for some upside, and so they want to be in those sectors. Now, with that being said, we want to take a look at the volume that's been occurring to kind of give us an idea. And today has been something that we haven't seen in the midday session, which is we have the NYSE. We have larger than average volume of about 400 million shares have traded versus an average, I'm looking right now, of around 319. Taking a look at the NASDAQ, you have about 843 million shares trading, and the average right now is right around 743, so well above that. We also have decliners outpacing advancers. On the NYSE, it's about 1019 versus 1970. NASDAQ 1157 versus decliners at 1489. And we have new lows outpacing highs. On the NYSE, it's 61 to 62, so barely. And NASDAQ 65 to 79. So you're starting to see that the markets, they're grinding right now in this unchanged area. There's a lot of uncertainty. Really uncertainty because of the fact that we haven't seen markets moving to the upside, because, hey, let's look at earnings, which is usually a huge catalyst. They haven't been that bad. As a matter of fact, they've been good. A prime example is Twitter came out. Everyone was anticipating doom and gloom, especially since they had not landed a deal. But the fact of the matter is their earnings were actually pretty good, which begs the question, what's going on with this market? We, again, looking around the market, looking for relative strength. Let's start looking at, around the world. We see that Egypt is actually the best performing market right now. If you take a look at the ETF here in the States, EGPT, that's up about 2.3%. Then we take a look at the livestock markets. If you look at the ETF COW, COW, up about 2%, got some movement there. Oil, moving to the upside. Been watching crude. We've been mentioning that that's been an anchor. Now it's actually a catalyst that's holding this market up. USO, which is the ETF that tracks oil, up about 1.6%. Then we have Italy. We talked about this morning. Ticker symbol EWI is the ETF that tracks the Italian markets, up about 1.2%. And then biotechs. Biotechs have been hot through mergers and acquisitions, also in earnings. IBB, which is the ETF that tracks that, up about 1.2%. Now, the relative weakness, that's coming in a lot of fronts, but the most notable ones are in the real estate and REIT markets. REITs right now, taking a look at ICF, which is the ETF that tracks REITs, is down about 2.6%. We have the IYR, which is the real estate ETF, down about 2.2%. That's after some housing data, which was good, but not great. And they were looking for some stronger numbers. Also, with obviously rates moving in the bonds, that puts into question whether or not there could be some potential slowdown and in that market, and so they're going to keep an eye on that, but there could be some profit taking. Also, metals and mining, look at XME, down about 2.2%. Steel, SLX is the ETF, and gold miners, GDX, down about 1 to 1.4%. And then Hong Kong, take a look at EWH, which is the ETF, also optionable, down about 0.6%. Now, going into the close today, there are some notable earnings, a lot of earnings coming out, but some of the more notable names that you want to keep an eye on, and you can put this on your radar screen, Amazon. Right now, Amazon, they're pricing in the options marketplace that the stock today and tomorrow could move within a plus or minus, either up or down, around $46.25 range. Big range is an expensive stock, but there's a big range in there going into this binary event of earnings after the close. Google, Alphabet is going to be reporting after hours. The options are pricing in the potential to move around $39.62. That's either up or down, plus or minus. And that's between today and end of business tomorrow. So we have a pretty significant move being priced in there as well. Amgen, biotech, big tech, biotech is going to be announcing, and they're pricing in the potential to move plus or minus 465 going into this binary event today, either up or down that amount into the end of this week. So want to keep an eye on that after hours. And then finally, a transport. Want to keep an eye on the transports. That's a great barometer of how the economy's going. If transports are doing well, the economy should be doing well. I'm putting that a little bit in question since the small caps are moving to the downside and are the laggard. That's usually a good indication. If the small caps start to get weak, that means the domestic economy could have some questions. But yellow, YRCW, they're having earnings after the close. They're pricing in a plus or minus move. In other words, up or down, a range of around $2.45. So a pretty significant range there as well. Could see some volatility in these names and others. We'll be covering those on the close at the closing bell this afternoon. Until then, we have Tech Talk at 3:30 Eastern Time. Join us. We'll see you then.